Okay, let's dive into this. Have you ever stared at a financial chart and felt like you were just looking at a chaotic mess of moving lines? Well, what if I told you that you aren't looking at random data at all? You're actually looking at a live, breathing psychological battlefield. In this explainer, we're going to completely decode candlestick psychology. We're going to strip away all that complex jargon and learn how to directly read the ongoing war between buyers and sellers, right there in the data. It all starts with one incredibly powerful question. How can you know exactly who controls the market in just 5 seconds? I mean, it kind of sounds like a superpower, right? But the data reveals that by simply looking at the shape and color of a single candle, you can instantly read the prevailing psychology of the market. You really don't need a finance degree for this. You just need to understand the extremely simple human behaviors, fear and greed, that are driving the price. Section 1. Nain Kuban, Sun Vida. Basic candles, green and red. To really understand this, let's imagine a real-world scenario. Think about a sudden, massive surge in demand for a brand new piece of technology. Literally everyone wants it, so the price shoots straight up. In candlestick terms, this creates a green candle. The buyers, or what we call fait moi, are aggressively winning. They have all the momentum. On the flip side, imagine a sudden panic where everyone desperately tries to sell off that exact same technology. The price completely plummets, creating a red candle. Here, the sellers, or fait bon, have completely overwhelmed the buyers. It's really just the most basic law of supply and demand, painted right there in color. But to truly read the market, you have to realize that every single candle you see is just a single battle in an ongoing tug-of-war. The market isn't just some static thing, it's a constant literal struggle. The buyers are pulling the rope up, and the sellers are desperately trying to drag it back down. The solid colored body of the candle, that just tells us who ultimately won that specific round of the fight. Section 2. Themli ang sobonin. The psychology behind candle shadows. You see, the solid body of the candle is only half the story. To see how vicious the battle really was, we have to look at the shadows, or the wicks. Imagine the buyers make this massive push, driving the price up in a huge wave of optimism. But then, sheer panic sets in. Sellers flood the market, aggressively fighting back. They completely reject that high price, forcing it all the way back down before the period even ends. The solid body of the candle shrinks, but a thin line remains at the very top. That thin line, the shadow, is literally the emotional scar of that exact moment. It shows the sheer exhaustion of the buyers and the violent, forceful entry of the sellers. And understanding those emotional scars brings us to an absolutely critical concept in candlestick psychology, the 50-50 split. When you see a candle with a very small body and long shadows on both sides, which is often called a doji candle, you're looking at a moment of absolute psychological indecision. And this brilliantly illustrates that perfect stalemate. The buyers tried to push up, leaving a top shadow. The sellers tried to push down, leaving a bottom shadow. Ultimately, neither side could gain any solid ground. They're perfectly matched at 50% buyers and 50% sellers. This visual hesitation is a massive clue for us, because it means the current momentum is completely dead in its tracks. Section 3. Buy and sell entry points. So the crucial point here is knowing exactly when to pull the trigger on a trade. Spotting a market reversal before it actually happens requires 3 specific steps. First, you need an established battlefield, so a clear uptrend or downtrend. Second, you wait to spot that exhaustion, like a 50-50 hesitation candle or a massive shadow showing rejection. And third, you never just guess. You wait for the confirmation. You want to see a decisive shift where the opposing side forcefully takes over. That right there is your signal to enter. Section 4. Mohing Dao Chu Guanxiao. Crucial reversal patterns. The source data highlights a few specific ways this turning of the tide visually plays out. The first major signal is the bearish engulfing pattern, or Mohing Yanqim. Picture this. The market is in a totally normal uptrend. Buyers are pushing green candles higher and higher. Then suddenly, a massive red candle forms that completely swallows the previous green candle. Psychologically, this means a massive wave of sellers just rushed the battlefield and completely overpowered the buyers in one swift, shocking move. The upward momentum is utterly destroyed, signaling a prime sell entry point. Let's move to the evening star, or a xauusd, and see how this builds. This pattern is basically a complete 3-step chronological collapse of buyer control. Step 1, the market is in a strong uptrend. Step 2, we get that tiny 50-50 hesitation candle right at the very top. The buyers are suddenly exhausted. Step 3. A strong red candle forms, aggressively confirming the drop. It's just such a clear visual story of market sentiment shifting from greed directly into hesitation and finally into fear. And then we have the shooting star. Remember those emotional scars we talked about earlier? Well, this is the most dramatic visual of a failed market attack. The buyers try to push the price up one final time, driving the market super high, but the sellers are waiting. They violently push the price back down, leaving a tiny candle body at the bottom with a massively long shadow pointing straight up. When you see that long shadow, it tells you the buyer's last charge was completely crushed, and a major reversal downwards is highly likely. Now you might be wondering, why does all this actually matter? What should you take away from this? Honestly, it's all about giving yourself a statistical edge. The data notes that when you spot these specific psychological patterns, like a shooting star or an evening star, at the absolute top of an uptrend, you suddenly have a baseline probability of 60% to 70% that the market is going to reverse downwards. You aren't just guessing anymore, you're literally reading at the fields. But wait, it gets even better. In scenarios where that shift in dominance is incredibly aggressive, where the sellers just completely dominate the board following those exact setups, that reversal probability doesn't just stay at 70%. It can actually spike to an incredible 80% or 90% chance of a market drop. That is the pure power of waiting for the psychology of the market to reveal itself in the data before you make your move. By understanding the extremely simple concepts of green versus red, the 50-50 indecision of a shadow, and the engulfing power of a reversal, you can completely transform how you view market data. So I'll leave you with this final thought. Next time you look at a trading chart, are you just going to see a random jumble of lines? Or will you finally see the human psychology, the fear, the greed, and the ongoing tug of war playing out in real time?